So for the Mr. Tony, let me go back to the other part that you said you don't understand that time. You said you don't hear anything. So I was talking. What I was saying about here is that if you want to if you want to calculate your risk, if you don't know, maybe like if you have $500 account, $100 account, $1,000 account, that is the amount of money that you have in your trading account is going to determine how much of money that you're going to put here. It's going to determine how much you're supposed to be, because if you are, let's say you have $100 account, you cannot be risking all those $100 account in one single trade. Okay. So now for me, if I say, let me say I have $100 account in my trading account, then I'm trading gold. The currency on my account is dollar. And then how much money am I willing to risk out of this $100? Me, I mentioned that I can risk all this 100 because sometimes my head is crazy. Okay, but I can never advise you to also trade like me. So my situation, my current situation is going to determine if I'm going to risk all this money. Because sometimes there are some times that when I don't have any other money in reserve. If I don't have any other money in reserve, I don't like to over leverage my account. I want to protect that money. But when I have another money in reserve, which I know that if I blow this money, I will put another money again. Because sometimes that I have extra money in keeping, so that money, I know that whenever I blow my account, that money, it belongs to my trading. So, but I have it in my bank account. So whenever I lost the one I have present on the account, then I will go and deposit another one again. That one is, but I can never advise anybody to do it, because I know I always say it. Don't follow. If I'm analyzing market to you, that is the right thing I'm telling you. But that does not mean that if I'm doing something wrong, you should also be doing the thing. You should also be committing the same mistakes. I will always tell you that. Okay? But you just follow only the instruction, the good guide that I'm telling you. So I have my $100 account I want to trade. Me, for example, I trade between the London and New York session. That means I trade 2 times a day. But inside that 2 times trading, I can trade. If I want to scalp the market, I can trade 3 to 4 times. Okay, but I trade 2 times, in the morning and in the afternoon. So, but if I want to put a seriousness that I want to trade, I will take trade in the morning. Maybe I put entry in the morning, 1 entry. Okay, and then if market is going well in my favor, I will break even for the first entry. Then I will add another position. That same amount of money that I was risking at the beginning. So that trade I was already in profit. Now I will remove my stop loss from that one. I will put it at break even. That means I'm not risking any money again. Then now that will give me the guarantee that I'm not risking another capital out of my account. So that is why I usually had another position. Okay. So the initial capital, the initial money that I was risking, that is the same thing that I'm going to use to risk to that another entry that I put. Okay. I think I've explained this thing to most of us many times. So if I'm trading, that's how I trade. So when the trade I'm supposed to take 2 times, maybe in the morning and also in the New York session, I can trade and make those profits only in the morning. Sometimes I can even still trade again in New York, and sometimes I can decide not to trade anything again and just go and do my things. Because that is how we're supposed to be trading. Don't say because you make money in the morning, you must make money in the afternoon. Sometimes you can make money in the morning, you make it also in the afternoon. Or you can make profit in the morning, and in the afternoon, you lost it back. And you still want to trade again, you will lose again. Okay? So that's it. When we start doing that, that means we don't have a plan. When you make it in the morning, you lost in the afternoon, maybe it's likely that it's better to leave the trade for that day. You know that day is already ended in loss. But before you take those trades, you need to have your rules in place. What are your rules before you take a trade? What are the reasons why before you take those trades? What are the reasons why you are taking that trade? What do you see before you take the trade? You need to know everything and then have it journal. I have it here. Look at what I have here right here in my front. If anybody can read it. What I have here, if I may read it out, this is what I write every morning. You can see here. Okay. In my laptop, I still go there. I have my pen. When I write everything down like that, I will still do it on my laptop on that note. What I have here, what I must to see before entry any trade. That's what I put here. First one is identify my market structure. When I wake up, I need to understand my market structure. If market is telling me uptrend, I need to know it. If market is telling me a downtrend, I need to know it. Identify the market structure. How do you mark that? Anyway, we'll come back to that later. Let me explain this one quickly because that is the part that Mr. Tunde is lacking because of his network. So after I decided the money that I want to risk out of my $100, this is my $20 I want to risk inside the $100. Now, okay, my stop loss, as I mentioned before, my stop loss, let's say, for me, example, on Monday, this is where I will likely to come and take a trade. I will likely to take a trade from this level next week. Because why? Market is telling me it's in a downtrend. Break of structure. Then I'm waiting for what again? Another retracement, and then this level, if I go to my 4-hour time frame, this place is because after the market break the structure from this area, okay, it left behind another block. Look at this candle. This is another block, and then before this very strong candle break the structure to the downside. So this candle is our other block, is our supply level, okay, and it has a small fair value gap right here, even though the fair value gap is not too strong enough, but it is fair value gap. On the 2-hour time frame, you can see it very well, and on a 1-hour time frame, it might be something choppy, but you see it there, okay. But because of this other block, I'm having that zone. So now, if I take my Fibonacci level from this level, this was the last higher low that we have before markets break the structure to the downside. Remember, how do you identify your break of structure? A body of the candle body, it has to close beyond a rejection candle. Okay, it has to close beyond a rejection candle. Mind you, there is still another thing. This candle here is another block here. Let's go back to 4-hour time frame. We should not have a sweep taking of liquidity, but that one is another thing, sha. Now, let me continue before I'm mixing things up. This level, I take my Fibonacci level, my last high, and then to my recent low. This is the level. So this is my 50% and 61% Fibonacci level that is currently sitting at this zone here. Okay. Now I need to know this is the middle point. You can see the line has a middle point because this box that you draw, it always have a middle point, which I've already explained it before. You can see there's a line in the middle. So that line, it is a divide. It is made that a middle point, that is a 50%. From this line to the upside, that is 50%. From this line to the downside, that is a 50%. No matter how large it is, that is a 50%. So that 50%, sometimes markets usually touch into that 50%. Sometimes it might not come all the way to the other block. Why I'm saying so? It can come to other block. It will come all the way to this level. Or sometimes it can even go here. Take out the liquidity here because you know that as people are selling, there are a lot of liquidity sitting here. People put their stop loss here. Okay. The market can go up there before going back down. But for this study, normally, if market go beyond closes above this level, then you have no reason of saying you want to sell again. You need to wait for market to give you confirmation. But if from this level, I see this type of candle, look at what happened here, candle, and then I see another bearish engulfing candle. We all know that is why we say we should understand how to read a candlestick. So after you understand the candle, which you were expecting on my 1-hour time frame, on a 30-minute time frame, you see what is happening. Markets has already, this was the previous low that market created, and then you can see market is already, even though you take a sell from this level, you put your stop loss above here, you could have still be making money. Okay. Now, I put my own stop loss above this level here. If I put my stop loss above here, I decide how much is this stop loss. This is 20, let's say 22 or 25 pips. Okay. From my entry, from here, any stop loss, you can say, let me just say 24 pips. This is 24 pips. From here, I enter here for a sell, and then My stop loss is here. So now, how much is the stop loss? 24 pips. That's what I'm calculating. Now, my trade lot size, which lot size am I willing to use? Okay, because before you come to the trade, you were already thinking that maybe you are going to use 0.02 or 0.05 or 0.010 or 0.20. You are the one know. But for this example, I'm using 0.01. That is what I'm thinking I'm going to use, because as I don't have too much money, so I'm willing to use this lot size. Now, I make a calculation. So this place is to calculate, is going to use your stop loss, how much is the stop loss, and then according to the money that you are willing to risk. That is what the information that this thing take to give you a normal lot size, a recommended lot size. Recommended lot size for you to trade. Okay, you were planning to use 0.01, fine. Okay, but because of the stop loss that you are using, it's a very, very large lot size. I mean, stop loss, sorry. Okay, and then $20 that you are willing to read. That means even though you use 0.08 lot size and you put your stop loss as 20 pips, as you said, that means the account will still be is going to still be $20 according to the information that this thing is giving us. Okay, now, but how this does not apply to your target. It does not really apply to your target. Your target is another thing, because this thing does not give you your target. It only calculates your stop loss for you and your lot size. It gives you the recommended lot size. That is a recommended. It is not an obligation. Remember that. You know, there is a difference between an recommended and an obligation. It is a must. A must is different from a recommendation. Okay. If somebody recommends you to me to come to me, it does not mean that I must accept you in my life. So we should know that differently. Okay, now you are the one to decide. If you see that thing is too high for you or is too okay, now you can now come down and reduce it. So now what I do in this scenario is that if I put my stop loss there. Now, if I'm trading 2 times a day, what I want to say, I put that lot size that this thing gives us is giving me sizing. It says 0.08 lot. That is what is recommended for you to use according to the information that I gave you. Now, I will now divide this. I can divide it into 3.
I think they are talking about the euro US dollar pair on these calculators.
So that is
euro US dollar.
You know, yes, you know this thing use they use the US dollar. Thank you. They use it to make a calculation.
That they are saying if you want, okay. And I understand what they are saying. It's if you want to risk $20, that you can even with that 24 pips stop loss. That means in euro US dollar, you can even use 0.08 and your stop loss can be the same pips.
Thank you very much. That is what I like to explain it. Okay, because on gold, euro US dollar, it is the base. It is like a base to calculate gold value. Like a euro, I don't know how that explanation is like something somehow to me. So, but they use the euro. That is why if you see euro US dollar is going down, it's trending. I mean, it's going bearish. You should also be expecting gold dollar will be going down. So when you go to the chart, euro US dollar is going down. That means gold also will be going down. Okay, we should know that. This is our gold chart. Let's go and look for euro US dollar. No. I don't know if I even have euro US dollar here. This one US oil. Euro. You can see now. This is the euro US dollar now. You can see. And then you see that gold is also down. You can see the same thing. So when you are trading, also gold, because they use gold, euro US dollar to calculate the information on gold. I don't know how that is really related, but it's just like gold is a base currency, while dollar is a quote currency. I think we understand the base and quote. So the first currency that is shown to your left is going to be your base, which also mark out here that euro is our base currency here. So that means if euro is going down, definitely also that means that time that euro is going down, dollar is very strong. That is why euro is trading lower. Okay, so and then if you go also to the gold chart, you see that also gold is going down. So unlike silver and dollar, so the silver and dollar also do the same thing as gold. That three currencies are basically correlated. Okay, so now my point here is that when you use that now what I do here is that if this is telling me that to use 0.08 lot to trade, then what I usually do is that I will divide. If I'm going to trade 2 times, I am not going to use that 0.08 in one single trade, but I might divide it into 5 or 4. That means if I divide it into 4, that will give me 0.02 lot size. Okay, but the currency that you are trading is going to determine if you need to divide it. If you are trading euro, US dollar, or you are trading GBP, JPY, or you are trading USD, JPY, that is basically means nothing. You cannot divide it because it's very low. This is gold. Gold is very heavy.
Very
So
heavy.
we should know that differently. So I think that's what Big Mara is trying to say. We should understand that part differently. So if I'm trading my own now, I put my stop loss here and I put my entry here, and then I was expecting that when market goes my way, then maybe I can move my stop from here. I will put it to I will reduce my stop. I will put it to break even to secure some profit. And then from here now, I'm going to add another entry. As long as I know that market will continue going down, I will put another entry. That stop loss that I move away from here, I'm going to use it again for this another trade. So you know that I've already break even for this first trade that I enter here. So that one, so I might be securing some amount of money, like maybe let's say out of the profit that is giving, maybe it's already giving me about $30. I can secure about $10. So I know that one is not more risky. If market go back to stop me, I'm making $10. But for this stop loss, for this new entry that I enter here, that one, I will put the stop loss above my entry, above the first entry a little bit, but I will be risking automatically the first amount of money that I was trying to risk. That is $20. That is the same money I will be risking above here. I will not make it more than, I can make it less, no problem, but higher no. So that now, if market go back and stop me out, stop the 2 trade. That means for this first entry that I enter, I will make $10. But for the second one that market stop me up, I will make a loss of 20. Now, if you minus 10 of the first profit that I break even, so that means I only lost $10. Okay. Now, in my New York session, what I do again is that since I've already separated my lot size, that means that second lot size, I will reuse it again. No, I've already lost $10 in the morning. That means I want to reuse the other part, which I'm already. So at the end of the day, I can lose. So at the end of the day, I can still make profit. So at the end of the day, I will calculate maybe sometimes I can make more profit than what I was expecting, or I can make less profit. But I will not end the day in a red carpet. Do you understand? So, but sometimes it does happen. So that is how I usually calculate my own. Okay. So, but you see, with time, all of us we are going to understand. We are going to know how this thing is going. It's a level by level. You cannot
The
understand.
gradual process, yeah.
So now, I hope this question have already. I hope this explanation has already answered Mr. Tunde questions. Now, talking about Mr. Karim asked me about head and shoulder. Though I did not
No,
understand.
actually in the group. I think you share it to everyone. I don't know, but the one you shared it to me last week. I think 2 weeks ago that you find this W pattern, this double shoulder, this when the right side is about to go, then you know that it's going to sell. When it's like this, you know that it's going to buy.
Yeah,
I don't know if you understand.
This one I explain it has been over 2 weeks right now. Yeah.
Yeah, I think
You
2
can
weeks,
still
yeah.
see this very thing this particular thing that you sent to me. The market is still on the same point. That last time I sent this chart, market was still something around here. Market was
Exactly.
It was basically around somewhere around here. This candle here. Yeah. This is my 4-hour time frame. I don't know what is my 4-hour time frame before this massive downfall, and then this two red candle somewhere around here. I don't know, somewhere around here. Somewhere around here. This is where the market was here. So this high we did not have it before. So but later this market is already coming. So this is my 4-hour time frame. Yeah, it was 4-hour time frame. I said I saw head and shoulder. I'm seeing head and shoulder. And that is the first thing that I also have already explained it in the first session, in our first session that so now we have a bearish chart, a bearish pattern here, which is market is creating. You can see the way market is moving, market is going this, doing this. Okay. So, but now if you still look at this chart very well now, inside this same pattern, we have what? We have head and shoulder, which is, this is our left shoulder here. We have the head, and then we have what? We have the right shoulder here. So, which is, I don't know why is that one. Why is that one not showing? Okay, now we have
this. The shoulder. That one, the one or maybe the one before reach to that right shoulder.
Okay. We can see it. This is what I'm referring to. This is a head and shoulder. Okay. Now, if I take this one, because this head and shoulder is not balanced. It is not balanced. It's not a balanced one. There are some head and shoulder that is very clean. But this one also is a head and shoulder because we have different type of head and shoulder. Head and shoulder can form in a different parts, in a different ways. One shoulder can be higher than another one, and another one can be lower than the other one, the other part. Okay? But the most important thing is that we should understand the head. As long that this left and right, they are not the same height. They did not make equal height with this head. Okay? That means it is our head and shoulder is correct. So if that is correct, then we need to understand the neckline of the zone. Okay? The neckline is very, very important. So the neckline, it is this one. This is the neckline for this head and shoulder. Because why? You can see multiple rejection from the point. Multiple rejection from the point. Multiple. Here it is this is the point. So if you want to add B, let's say there is no flag pattern included in this chart. Let's say if we want to take this trade based on this head and shoulder, that means we need to wait for the price to break this neck. That means price must to break here. And then we wait for a retest before we can expect to take a trade from this retest. On our lower time frame, you can go this on a 4-hour, then we wait for that break of this neck and then retest, then before we can expect to sell the market. We must wait. Normally, the studies say it is always recommended to wait for market to break the neck. Even though you have a double bottom, always wait for this neck. This is the neck here. Always wait for it to break. Then when it broke, normally it usually come back for the retest before the market will go again. Okay. So sometimes this bottom can go lower than 1. It can even go higher. Maybe it may not be the same low. It may not make equal low, but the most important thing is that we should identify that this is the W pattern, double bottom. Okay, and then wait for a retest depending on the type of candle that broke out. If it is a multiple candle that broke out, there are sometimes that multiple candle break out of the market, of the neck. If multiple candle break, we cannot expect a retest. Multiple candle, that means market candle comes, it did not go too high, it stop here, another one open, accumulate before going higher. Then we might, because that retest might not happen because we don't have a fair value gap. But if it is a very, very massive candle, strong candle, boom, then likely we should wait for the next candle that is going to print here. So if this candle does not have volume, if it does not have volume like the first one, then we can likely to see a retest before market will continue to the upside. But if this candle has a volume closing above also, then we can continue taking our trade from the second candle. Okay, so that is what I explained here. Over 2 weeks ago now, I've explained this thing, and this thing is still there. Look at it, it's still there. All what this thing has done is that go here, it has gone here, and then now it's coming back to this support. Now it has already break out of this what is it called, bearish flag. Because this line is our bearish flag support level, this line that go up. Let me delete all this because the screen is too nasty now. We don't even see anything almost.
Oh yeah, I've understand now. It's like for explanation. I'm just trying to get, since you put it that day, that you just get a new way of gold out, go trade. I just want little bit hint about it. So
yeah, this is what I was explaining, because since these things are giving us two pattern, bearish flag, we have a bearish flag, and then this bearish flag now is already confirmed a breakout, and or even retest. Follow, you go to the 1 hour time frame, you see the retest. You see, it break out of the support level, and then you retest, came back, forming a double bottom, came back again to retest the zone again, and then now it already break the structure and go down. But now we have our neckline for the head and shoulder that is sitting right here now. So what my own expectation for this new week is that the head and shoulder and the flag pattern, they are already complete. And when the pattern complete, that means the two of them are telling us market is going down. This flag is telling us going down. It is a bearish flag. You know what I mean by a bearish flag? A bearish flag is when market is going to a downside. I think I mentioned it before. This is the one. When market is in a downtrend, then it will see such things. That means market will break out to the downside, continue to it's a continuation pattern. We have a reversal pattern and we have a continuation pattern. There are some continuation pattern, a reversal pattern that when the market start creating the reversal pattern, let's say double bottom, W, markets will go back to the upside. That is a double bottom. There are some one that is a triple bottom. There are some one is that a wedge pattern. We have a wedge pattern. We have which one again? We have a rectangle. We have there is a lot. We have a continuation pattern. We have a reversal pattern. Head and shoulder, inverse head and shoulder also is a reversal pattern. Okay, because when market an inverse head and shoulder, it is the one that when market is in a downtrend, market is going to a downtrend, and then suddenly we see market form the inverse head and shoulder. Look at the inverse head and shoulder right here. Okay, this is the left shoulder, and then this is the right shoulder. That means it's telling us that market will reverse back to the upside because market was coming from a down to the down before, and then later it will return. But if it is a head and shoulder, it is likely I don't know this one now. Now this one will tell us that the market will continue back to the downside, like this one that we have right here. Okay, this is the left shoulder, right shoulder, and then we should expect market to return and then continue. But this one's supposed to be in an uptrend. Sorry, it's supposed to be in an uptrend. Okay, It's supposed to be in an uptrend, and then market will reverse. Okay, now this is the one that we have right now here. We have bearish flag, which is market is coming from the downside. Okay, coming lower, and the market form it. And then at the same time as it's forming this pattern, also form at the same time a head and shoulder. So that means market is really weak. Buyers are very weak. It's very weak. Okay, so definitely two of these patterns, they are telling us market is likely to go down. And then now the bullish bearish flag is has completed, because as it has already break out of the trend, that means it's ready to go down. So now the only thing that is disturbing this one now is that the head and shoulder, because this is the neck area. This is the neck area. Since the head is not balanced, there are some head pattern that is very balanced. There are some head pattern that is very balanced. Okay, there are one that is very balanced, like this one. Yeah, this one is balanced. Okay, this one is balanced. When it is balanced, you see now it is very straight. The neckline is straight, unlike this one that we have right here. Unlike this one that we have right here. So this shoulder is more higher. The neck of this left shoulder, it is higher than the neck of this right shoulder. Okay, so that is why, because you can see the bottom, even the head, the neck of the head, it is lower than this than the left shoulder. So that is why this head and shoulder, this head is not balanced. So that will make it that the neckline is very declined. It's very slope. This is a slope neck. So, and then if you want to take the trade, we need to always wait for confirmation, like after the market break out of this place now. Even also it's already showing a very aggressive selling now. So, but now we have a break of structure, and then we have a other block here, fair value gap. Then likely, that's why I say likely market will reverse back to this level, first testing this level, clearing the liquidity above the previous week high, previous week close, and then come back. I don't know how long is that going to take. Maybe it can take Monday. This can happen on Monday, but I know gold will go down. I know gold will go down. Gold will go down. So we are expecting, if you want to check this thing now, if you want to check these two patterns right now, first one is this. Where's this thing? This is the neck for the head. You mark it, and then we bring into the breakout. So likely you can see the level now, 4,500, 600, something like that. And then if you check, if we take if you check the flag from here to the bottom, normally if you want to go to be for, you cannot. Let's just use the support level. Let's use the support level, and then to the breakout. This is already the breakout here. I don't know, but I don't want to put it there now. So you can see now it's almost the same thing. It's the same thing, the same level. So possibly, if you go to your 1 hour time frame, you can see now. You can see the thing, everything aligns together. Head and shoulder is pointing to the same level, and then the flag also is pointing to the same level of the target. That is 4,000. No, that is 4,500, 4,600, or possibly 4,000 something. 500 level, 400 even possible, because if you go to our daily time frame, we have a very a liquidity zone right around this area. You can see this level here. Market has to test this area again. It needs to be tested again. So possibly you can leave a rejection also like this one here before we can see another a strong buy to the upside before, because gold need to buy. Gold need to go to 7,000. Gold need to go to 7,000. So, but before we can see that, we need a retracement back to this zone first. Okay, so that is what me.
what is going on in the Middle East as well.
So for all these things that is
It's
going on,
been a big decision so far.
exactly. So that is what me I'm looking at the chart. I'm looking on the chart right now. So that's my opinion. So, but this does not mean that when market open, you should just start selling. You need to always wait for confirmation, analyze your market very well, analyze your charts, identify your candle zone, and your candle type before you take your trade. We all can see whenever market gold want to sell, how did it sell? Even you just take it on your 1 hour time frame. When gold want to sell, look at very strong bearish candle. Every time you want to sell, look at strong bearish candle. Look at strong bearish candle. Whenever you want to sell, what happened? Look at strong bearish candle. So look at another strong bearish candle. So when my gold want to sell, you should check on this thing. Very simple. Let us look at our time before we take trade. Always be patient. Look at very strong bearish candle before you sell. Look at it. Look at it. Look at it before the gold sell. Before you start selling. So it is something that psychological things. We need just look at the things. What market is doing before he does this. So when you know market this thing usually do this before you do this, then you should know that okay, let me wait for that thing. So that's why we study candles. Okay. So I don't know if we have any questions. So so I can close the
Yeah,
channel.
I've asked my question, but thank you for the explanation.
Okay.
It's very clear now.
Yeah. And then so please, I don't want us to waste money again. I don't know, Mr. Tunde especially. I don't know if this thing really if it applies to him. Big Mara.
I'll be grateful for this. What do you call?
So for me, this is where I'll be expecting to take it. My sell. This is where I'm expecting, and then my target. I'm not looking for too much. So when market break my neck, when it break the neckline, when it break below here, then I will expect likely another retracement back again. From here, I'm expecting this. So that is it, Big Mara.
Yeah.
Any issue, guys? Anything?
Well, I think it's clear. I'm just praying if we can be making use of what we are learning, because that's the most. Because every day, every time you open the chat, you are really seeing what you really learn. But when you are, even what I'm saying is, you used to say something which is very much important, to stop making use of all the information, because it will make you it will restrict you not even trade. Okay, let's say if you have already seen a strong move, wait for the 50% or the 61%. Full stop. But if you analyze beyond that one again, that one will restrict you again to wait for a test or to before you get to know, you have already missed out.
Exactly.
But if you are waiting for only that one thing, if you are only waiting for the other block, trade on that other block. If you are only waiting for invited, if you it's good to be only trading one thing. To forget if it's only support and resistance. If the market never make the support, it never make the resistance. Forget about it first. So if we trade like that, that will make we will not take many trade, and it will be selective and qualitative with quality. But I think one thing I believe about Forex, as long the market, financial market will give you money more than what the lawyers and doctors will be having. So that's why it's not a just easy thing to just achieve everything on it that way. It must undergo some certain story explanation in the future. So that's what we are undergoing. I just pray we're able to master everything. But to say that now, more especially me, I'm not thinking there is no anything you are explaining now that you never explained to me before. All these things are I mean now. I'm seeing everything. But it's just like it's self-psychology that remain with me now. The battle is left with me now for me to master it, for me to be able to defeat those problems in me. But I think you have already do all your best to me all the what you need to tell me, you've already tell me. I'm seeing everything. Reality, all what you are saying is true. You know.
Yeah.
I'm just praying for at least God to help me to be able to do actually what I'm learning. You know.
Yeah. God
So
will
thank you very much.
That's a big thing that come. I would say this support and resistance. What after my support and resistance, what I apply now is the Fibonacci, and it has been helping.
Yeah.
To be honest, if I apply my Fibonacci